It's a tough question because people have different objectives, and $1 million for one person is different to $1 million for another. You know, if it's my 25-year-old daughter sort of saving, and she came, for some reason, came into $1 million, and she's saving for a house, I'd say you don't want to take too much risk on that. You know, it's not the time to be, taking a big position in equity markets. You might want to take some, maybe some sort of high yielding sort of defensive domestic equities, because I think that's a much less overvalued market than the US. In fact, I'd probably argue the Australian share market's broadly fair value. Don't be afraid of cash. Probably good quality investment grade credit, but a pretty conservative portfolio. I think even if you were somebody who had a higher natural risk tolerance, I think at the moment I wouldn't be encouraging you to put a lot of that money into equity markets. Certainly on a 12 to 18 month, 2 year sort of time horizon. Our sort of objective-based portfolio is to give you some sort of reference that sort of generally target a return, a real rate of return of around sort of 5%. We have about 20 to 25% of those portfolios only in equities at the moment. So, probably more equity than I'd be encouraging my daughter to take, but still a relatively defensive portfolio. Be very mindful of liquidity, because I think in the next 12 to 18 months there'll be an opportunity to actually deploy that capital, to make some investments at much more attractive prices. So I think a little bit of patience with that $1 million, depending on, irrespective of who you are as an investor, I think is likely to help you in the long run to sort of generate a decent rate of growth on that money.